Fed Jerome Powell just gave us the most dovish FOMC press conference that we have seen in a very long time. I mean, there's not a lot of things you could point to that was negative. And this is really averting potentially a market crash, and that can, and I think very well, will lead to a short squeeze with AMC stock. You've seen AMC perform beautifully today, up 6.73%. Including the move in after hours, you were up almost 8% on the day. And I think it just might be the start. So we're going to get into everything Fed Jerome Powell just said that is massively bullish for the markets, at least in the short term, not so much in the longer term. We'll talk about that in a little bit more detail here in this video. And we will also go over all of the data behind AMC that you probably want to know. So let's get into it, guys. You know the deal. Hit that like button and subscribe to the channel. Source your comments, questions, or concerns down below in the comment section. So first things first, guys, you had the press conference that started at 2 p.m. You get this report and they basically just outline a couple key things, and people, market participants, they really pay attention to like what has changed, what changed from the last report to this report. And they took out a lot of your causes of inflation. They took out the fact that the war was a cause of inflation. Supply chains was a cause to inflation. Or even, you know, to a lesser extent, just consumer spending overall. They took out a lot of your reasons for inflation, COVID as well, out of the actual statement. So that was massively bullish, and that's why you've seen the markets react very positively once that report did come out. The only thing that was, you could call it bearish, was the plural use of rate hikes. The Fed said ongoing rate hikes, and that means more than one. So the markets were really hoping we get this Fed rate hike, and then maybe the next meeting we get a pause. It's looking like at the bare minimum we're going to get this rate hike that we just got and at least one more down the line. But as of right now, it's looking pretty dang good that we're going to get a Fed pause very shortly. So that is really the big story of the actual report that came out, and that was again at 2 p.m. and we could go ahead and look at the S&P 500 during this time. This was the report, right? This was the actual press conference. All of this massive green. You were kind of sideways off of the report at first glance. Now, the Fed questions, where reporters ask Fed Jerome Powell questions, is really the thing that is the biggest driving factor of these FOMC meetings. And we're only going to go over the important stuff because a lot of the questions the markets don't care about, but you could get like 1, 2, or 3 questions that drive the whole thing. Because after all, what the Fed is trying to do with those press conferences is to get you ready for future action from the Fed. That's why throughout all of 2022, Fed Jerome Powell used those press conferences as a way to kind of talk the markets up and get them ready for more and more rate hikes. That's why we weren't surprised the next meeting when we got a larger rate hike than the last meeting, because Fed Jerome Powell told us essentially it was coming on the press conference. Now, the biggest thing I think that happened in the press conference today that was very, very bullish is a reporter asked him, they said, because financial conditions have been loosening so much, does that mean that they will lift rates higher or take rates higher? What's up, my girl? 2-year-old. I don't know. Will they lift rates higher because of that? And he completely dodged the question. He didn't answer it. The answer that he gave you was that the markets are appropriately discounting Fed policy. So he was kind of saying it's appropriate that market conditions are starting to loosen, but overall he did not bat that down. He did not say, yeah, we'll have to evaluate, but it looks like we might have to raise rates more because of this. That would have been a bearish answer. You got a very bullish answer instead, and that question alone sparked a lot of this rally that you've seen throughout the day, and you did close up 1% in the S&P and up 0.32% in ASP. in after hours. Now, he says that the disinflationary process looks like it has started. And disinflation compared to deflation are different. Disinflation means, simply put, inflation coming down. What, my girl? Are you okay? Sit down. Disinflation means inflation coming down. Whereas deflation means you're actually seeing, like, usually it happens during a recession where things are actually cheaper than the year before. For an example, if you bought a $100 phone, for an example, and the next year it's $105, well, that's 5% inflation. Whereas if that following year that phone was at $105 and went to $107, it's still an increase year over year, but it's disinflationary from the 5% you've seen the year prior. So they're basically acknowledging that things are on the right course and that policy is taking its course. Now, also something which was really bullish is the Fed acknowledged that there's really only one part of the economy left that still is seeing inflation, and that is core services x housing. And he was saying that's the tough one. That's the one where they're not seeing a lot of soft data coming in that's showing it's going down. They're not really seeing that process starting, like the disinflation that you are seeing in goods prices, the disinflation that you are seeing in housing, right? You're not seeing that in core services x housing. And then he was also asked, why not pause here? And he answered with, we still have a couple more rate hikes, but they're not really far off of that point. And I'm kind of paraphrasing here, like some of these are exactly what he said, at least with this question. He basically said we have a little bit more work to do and that it would be premature to pause right now, but he also gave you hints that you're pretty close to that point of getting a Fed pause. Now, in the beginning of this video, I did say that this is extremely bullish in the short term, but not so bullish in the long term, and that is because historically, as interest rates rise, it tends to be a very bullish thing, right? 2022 is a real anomaly where the stock market actually went down and went through a bear market when the Fed was raising rates. Usually the markets do just fine and actually goes higher when the Fed raises rates, not in 2022. But when the Fed actually cuts rates, that's where you tend to get crashes throughout history. And if we go ahead and take a look at the federal funds rate, if you guys have not seen this already, if you don't follow this channel, I mean, from the mid 80s until 1989, the Fed was raising rates. They started to cut rates and pause for a brief moment and then start to cut rates, and then you went through a recession. Same thing back here from 1994. They were raising rates and more aggressively from 1998 until 2000, right? And the markets were going straight up at this point. There was a bubble in the markets when the Fed was raising rates from 4.76% to 6.5%. And then the recession came back here in 04 through 07. I mean, it was a great time to be an investor, buying real estate, buying stocks, just basically anything. It all did well. The Fed paused, and then they started cutting rates, and then you got a recession. Same thing from 2015 through 2019. You've seen the Fed raise rates at a very slow pace and then ultimately start to pause and then cut rates. And now you're at the point where the Fed is starting, or at least I don't want to say starting to get ready to pause rates, but starting to talk about it at the very least. And historically, 90 days after a pause, you see the first rate cut. And historically, when you see rate cuts, it's not a good thing. So that's why it's not necessarily bullish for the next 6 months, right? 6 months down the line, if earnings do not hold up and the Fed is cutting rates, it's going to be not a good thing for the stock market. It's just not. History shows us that is not good. But over the short term, people are going to be very excited that earnings are at least so far coming in not as bad as feared. And the Fed is starting to discuss that pause, right? We're not talking cuts yet. They're starting to talk about a pause. And they're really making it clear, or at least Fed Jerome Powell, he really made it clear that we're heading towards a pause very soon, with just the lack of bearishness that he had to say. It looks like Fed Jerome Powell turned into a dove. I mean, the most dovish Fed Powell that we've seen in a very long time, at least. So there is that. That's the information as far as Fed Jerome Powell and the Fed that you need to know. On another note, Facebook just did some wild things. They increased their buybacks by like $40 billion. They did guide up for next quarter. The stock is up 20% in after hours, going from 153 to 184 to close out the trading day. And that's a huge bullish sign for the advertising space and heading into more important earnings, which will be tomorrow in after hours with Amazon, Google, as well as Apple. So that's really the last hurdle we have to get through, is going to be tomorrow's earnings. But from my perspective here, it looks like we might be into a new bull run for 2023, at least over the next couple of months. Now, how does that set AMC up for the MOAS? Well, you can think about it like this. It sets up the market environment to be able to reward companies with good earnings. For really a big extent throughout the past year and a half now, if companies have had good earnings, they haven't been rewarded for it. I mean, not these 20-30% rallies off the lows. You really weren't seeing that in 2022. Like, the stock might not drop 20%, but it's not going up to the moon when you're in this bearish market environment. Now that markets are like, hey, the Fed's going to be pausing soon, maybe, you know, spending might increase, maybe we won't go into recession. When companies have good earnings like Facebook, they get rewarded for it. And I do think AMC will also have some really good earnings, and it's going to keep us above this major squeeze level heading into AMC earnings. And that's something we've talked about extensively here on this channel. The squeeze level is literally the squeeze level where you were at before the June rally. So on a split adjusted basis, after all the splits and all the dilution that we've seen over the past year and a half now, you're at the same adjusted level as you were before the June rally. You're also almost breaking out above this downtrending level of resistance, and especially if we break out above this heading into earnings, that's a positive thing. But as long as we stay above this blue line, I have indicated to you that I 100,000% think that you're going higher from here, that you will see a very explosive move, and one could call it a short squeeze. I mean, that's what kind of market environment it's starting to look like, especially if AMC gives us some free operating, cash flows here. If they can support themselves and not burn through so much capital and have good things to say about 2023, just connecting, 1 + 1 = 2, connecting the dots, or making a tic-tac-toe on the chart. I mean, it's starting to make sense. All of this is pointing towards the same direction. That's the point that I'm trying to make. And it's a short squeeze. And it's only a short squeeze because of why the activity on AMC stock, the community that continues to be behind this stock, but also the pure data here. And that's something that's hard to dispute. I mean, the data looks prime for a short squeeze. You're sitting at almost 23% short interest of free float. 118 million shares that are currently sold short. Cost to borrow max at 515.5%. Cost to borrow average at 398.5%, and cost to borrow minimum at 84.62%, whereas Interactive Brokers has you at a 103% cost to borrow rate. So when you add all of this together, the market environment after Fed Jerome Powell just flipped. It just changed. There's really no other way to put it. You were kind of fearful heading into the Fed because what if they want to get the markets down? What if they want to push stock prices down? It's clear now they don't want to do that. They don't think it's necessary to cause the markets to go down in order to fight inflation. And that gives you room to rally to the upside. And, to the extent of a pause and all of that, I don't think the markets are going to look at this bearishly until it actually happens, until the Fed does cut rates, until earnings potentially get worse in 2023. Who knows? Maybe it doesn't happen at all, But the market environment is now primed for a short squeeze. So I do indeed 100% think if this continues and earnings tomorrow and after hours with Amazon, Apple, and Google are bullish, you just paved the way for some sweet, sweet tendies. So that is all for this video. Hit that like button and subscribe to the channel. Source your comments, questions, or concerns down below in the comment section. Khaleesi, say bye, guys.
Bye, guys.
Say hit the like button.
Bye, bye.
Say Jerome Powell.
Bye, ciao.